SCHD just announced their second quarter dividend, and it is way above their last quarter. It's 82.41 cents. Compare that to 61 cents. That's like a 30% improvement in the dividend payout. And so in this video, we'll do a deep dive into the holdings of SCHD, their dividend yield, dividend payouts, and how this dividend ETF is looking for investors. Okay, guys, before we begin, I am asking you to help a brother out. There is less than 9% of you who are subscribers, people who watch these videos. So please help me build out this channel. Smash that like button, subscribe to the channel, and let's begin. Alright guys, so now with 82-cent dividend for second quarter, the forward yield is now above 4.26%. And that's based on today's share price, which is $77.40. Now, this will change a little bit, and also if we look at this dividend graph right here, you can see that dividend payments are different every quarter. It's not stable. So will we have a consistent 82-cent payout? Probably not. It will jump around. It will probably go down to 75, 73 cents again. And by the way, if you watch my video about the predictions for this quarter, so our software shows that the dividend should have been about 77.6 cents. So we were kind of close, but not close enough. The actual dividend is 82.4 cents. And in my video, I actually said, because of this and that, they will probably pay 71 or 72 cents. They beat me by 10 cents. That's a huge increase in the dividend. And if you watch that video, this 10-year CAGR was below 9%. Now it's like 12%. And 1-year CAGR now sits at 23.98%. So that's basically 24% improvement between this quarter and the second quarter of last year, which was 66.5 cents. So 24% increase. Now again, this dividend will likely decrease a little bit going forward, because each quarter, depending on how much money they have collected, and that's how they actually work. So they hold all these companies right here. So there's like 98 companies that they hold, and they collect dividends from them throughout the quarter, and then they pay out to shareholders, however many shares there are. By the way, guys, so right now, as of today, the share count stands at 703,350,000, and about a month ago, it was actually much higher. It was like 300,000 shares higher, maybe even like 500,000 higher. So few people got out of this fund, and that's why we're getting a higher dividend, because there's fewer shares, and so the pie gets split into fewer pieces. So what's interesting, guys, if we look at this chart right here and we go out, so over here, finally the TTM was calculated correctly, because this was the first year, so it calculated trailing 12 months based on one quarter. So over here it's like fully priced in, and basically in 2012, that was 12 years ago, the dividend yield was sitting at 2.846, so 2.8.5%. Okay, and you can see this dividend yield curve, it's actually going up. So what's happening is they're raising their dividend faster than the share price is increasing, and we can see it over here. The CAGR, the 10-year CAGR is almost 12%, and that's on the dividend. So they increased their dividend an average of 12% a year. Guys, that's amazing. That's more than Microsoft. Okay, Microsoft dividend CAGR is 10% over the last 10 years. However, the price CAGR is only 7 and 28%. And that means over the last 10 years, the price went up on an average of 7.28% per year. And so over here, basically it topped out in 22, beginning of 22, and then like the Russian invasion of Ukraine began, and the oil prices went up, and the economy peaked, and everything started going down. But basically last 2.5 years, SCHD has been below this peak. It actually never made it up, while S&P 500 already beat that record by about 10%. If we look at the SPY, so S&P 500 was over here at 478 on December 30th, 21. And from there, it only went down and actually crashed down to like 360 level, even below that. But now it's sitting at almost 5,500. So it's sitting above this peak in 21, 22. However, SCHD is not. And while for some people it might be like not such a good thing, the stock is not growing or the ETF is not growing, in reality, you're getting a better price and a higher dividend. Because so this is basically Q1 of 22. Let's take a look at the dividend. So Q1 of 22, right here, the dividend was on December 2021, it was 62 cents, and here it dropped to 51.8 cents. Now we're gaining 82 cents. So the dividend has increased tremendously. And by the way, this Q3 over here, Q3 of 21, that was the highest dividend payment that year. If we look at the larger picture, so this was the highest dividend of that year. And now this is only second quarter. Usually the fourth quarter is the highest dividend of the year. So we can actually expect at the end of the year the dividend to be like around 90 cents, 85, 90 cents. It may or may not, and we need to take a look at the holdings of this company. So basically they just had a reconstitution and they got rid of the companies like Broadcom, which since then increased in share price by 25-30%. I think it went up like 20% just in one day when they announced earnings recently. And so they added a few companies to this list, but basically they changed the build-up of the ETF and the holdings, and now they're more in line with their goal of the ETF, which is to produce dividend income. So you start basically over here, you show top 10 holdings, that's by percentage or the value, the dollar amount in the ETF, okay, market value in the ETF. And if you open this whole thing, you can look at let's take a look at the dividend yield. So these are the highest dividend, highest yielding companies. So MO, it has a pretty large standing in the ETF. That's Altria. I just did a video on them. I think they're a bit overpriced right now. And if the price goes up, the dividend yield goes down. So right now it's about 8.5%. But just 3 months ago, it was sitting at 10% because the price of MO, if you look over here, it was around below $40 just 3 months ago. Let's take a look at the price chart. So right here, 1 year here, March 4th, it was below $40. October, a lot of stocks dropped in October. So October is not really, a good example because even the S&P 500 dropped, everything, Nvidia, all the major stocks dropped. But here, as everything is going down, MO made like it was near 52-week lows or Ultra, and now all of a sudden it jumps 20%. Like that's completely insane, and I think the only reason it jumped in price was because in solidarity with S&P 500. I don't think this price increase is warranted. I think it's going down again. So I sold shares in the Ultra that I had, obviously made a profit, collected dividends for a few years. It was a good hold, and I will probably get back into Ultra once it gets back down to like $40-41 range, which I think it will within a few months. We shall see. And if you want to check that video out, it's on my channel, so I will link in the description. But anyway, so back to SCHD holdings right here. So Ultra is the highest dividend yielding stock, and next one is Western Union. A pretty interesting stock, guys. The share price is down significantly. Like over here was $28. You can see 5-year dividend CAGR minus, not dividend, price CAGR minus 9%. So over the last 5 years, it has decreased by 9% on average, 9.17%. They didn't raise their dividends for a long time. They stopped over here in first quarter of 21 during COVID, but they've been consistently paying them out, and dividend safety of this company, so payout ratio, are sitting below 60% on average, so that's pretty good. Free cash flow to dividend, it's actually way above 100%, so that's not good. But free cash flow is after they basically paid out their stock-based compensations, all of that stuff. It's an interesting stock. Like, I'm not saying you should buy it, but basically the revenue is not looking very good. So the revenue is down 2.5% on average over the last 10 years. It's sloping down. You can see overall it's a significant drop in the last 10 years from 1.41 billion to just 105. So that's like 35% decrease over 10 years. That's not good. It's not good, but EPS, it's actually not doing that terrible. It's actually rising by 1% a year. So while the revenue is dropping, earnings per share are going up. And that's an interesting phenomenon. And basically, they're squeezing more juice out of the lemon each year, each quarter. So overall, the number is going up, and that means their net revenue is not dropping. So, well, net income is dropping. You can see 3.5%. And the reason why EPS is not dropping, why EPS is positive, okay, so net income, EPS right here is positive. The very interesting thing is this here, shares outstanding. Look at this. They had 540 million shares 10 years ago. Now it's only 345. So they decreased it by almost 50%. Well, 50% if we go up from here, but about 30% from where it was over here 10 years ago. So they have fewer shares, so they manage to increase the earnings per share. But still, overall company revenue is dropping and net income is dropping, and that's not a good sign. But you know what? They're paying dividends. They are pretty cheap, and SCHD is collecting those dividends. They're holding a very small number of shares, just like 8 million shares of Western Union, and that's a very small percentage point. 0.18% of the total fund is Western Union. Interesting stock. These are, I don't even know what they are. They're pretty small holdings. So out of the big holdings, Verizon, that went up in price. It was like 52-week low or all-time low. Well, not all-time low, but it was sitting very low over here. You can look at the price chart. Yeah, 10-year low. 10-year low, guys, over here. And they, I don't know how much they bought back then, but how much SCHD added of these shares, but it is a large component of a SCHD, and it's paying 6.5% yield. And so overall, these dividend payers, they're bringing in the money, and that's why we have 82 cents dividend. So another reason why we have such a high dividend, because like our software shows that we should be getting like 77.6 cents per quarter on average, and that's based on the last dividend amount for each one of these companies. Okay, why they paid more this quarter? I think because like there was a hold up, some companies may be paid out later than they should have. So in this quarter, SCHD collected more money than they did in the prior quarter, which was pretty low, like 61 cents is very low for this ETF. But overall, guys, you can see the dividend yield curve is sloping up, and that's great for those who are long-term investors. Like, you actually get to buy this ETF for a lower overall price, and your yield is rising faster than the price. So you get to collect more shares over time, and and collect more dividends. Now, I bought actually some shares over here at $69. I bought them over here, but then I sold them over here. So I was in and out of this ETF, and I finally decided to just hold my position forever and reinvest dividends, because I got a decent entry point. Right now I'm up on the price. I already collected 3 quarters. This will be a 3rd quarter of dividends on this position. I'm not going to sell it. I am going to drip it. It's not a huge position, but I want to build it out over time, because if we look actually over here, so this is our SCHD dividend calculator, guys. Let's calculate this dividend. Just if you invest $10,000 today, and if the dividend continues growing at the same pace, so currently it sits at 12.5%. Let's make it 11%. What was it here? 11.85. So we'll keep it at 11. Keep it at 11, and share price increase, we'll keep it as is, and we'll calculate that. So in 10 years, no, that's 20 years. By year 10, you would be sitting on a total value of $30,000, $31,000. That's 210% increase if you drip, if you reinvest your dividends. Your return over 10 years would be 210%, 209%, which is amazing. And if you actually add, let's say, $100 per month, it's not a huge investment. Then by year 10, you would be sitting on almost $54,000 with dividends reinvested. And by then, if you click over here, so year 10, your total investment would be $22,000, and therefore your total return would be $31,000, almost $32,000 total return over time. And again, like, your initial investment is 10 grand, and then you add $100 a month, so you don't put it exactly in at the same time. And if we actually use the current dividend growth, I don't think it will be 12% consistently, but it is growing historically, and the share price is not keeping up with the dividend growth. So that's a good thing for new investors, because you actually buying it on a discount. That's the way I see it. Like you can see here, in the last 3 years, the stock has moved nowhere. So over here, June 2021, 3 years ago, 76. We're sitting on the same price right now, 3 years later, and the dividend from June, what was in June? So 2nd quarter, 54 cents. Today it's 82 cents. That's a huge increase. That's like almost more than 50% increase in dividend amounts over 3 years, guys. Amazing, amazing. So yeah, congrats to all the holders of the SCHD, and I'm going to make a video about investing into SCHD for retirement, and whether or not it's a better investment than SPY or S&P 500. So basically my current thoughts are that I already did the math, and long story short, investing in SPY is actually better if you go off these numbers. So 11% price CAGR and 6.5% dividend increase, or dividend CAGR. However, will it grow at 26% consistently? Guys, it went up 26% in the last year. Okay, SCHD went up less than 9% over last year. Basically, it's flat. So you're basically, if you get into SPY today, you're buying at the peak, and it might not grow as fast as you might want it to. So actually, if we compare ETFs, it will default to SPY and SCHD, and you can see over here, SCHD was actually ahead of SPY by a large margin, guys. At some point it was like over 30%. Right here, 32% on January 10th. So basically, beginning of last year, a year and a half ago, it was 30% above SPY in total returns over 10 years. But Nvidia and AI happened. Look at this hockey stick, it's like insane. But investing at this high point, I am not sure it's a good idea. You know, when they're in equilibrium, it's probably better. So right here, April 25, you could invest in either one, and but I think at this point the SCHD is probably a better investment, at least for me, because it's underpriced. It's the price of it is depressed, and the reason for that is basically RSP, which is equal weight. So let's check RSP, equal weight S&P 500. You can see it's basically also not moving anywhere. It peaked over here December 28 at 163, and right now it's 165. So in the last 3 years, it basically didn't move anywhere. The dividends went up a little bit. The dividend yield is not so much. It's basically flat over the last 10 years. So, but you can see why SCHD is down or not growing, because it's largely similar to RSP, which is equal weight S&P 500 index. It's similar in terms of like market breadth, where S&P 500 is basically growing because of Microsoft, Nvidia, Apple, and all of that good jazz. Basically 6 companies are carrying it forward, whereas the broader market is not increasing, and you can clearly see this. And I think this puts SCHD basically on it makes it a discounted ETF at this point. That's my opinion. Now again, not again, but basically none of this is an investment advice, guys, just a review and a deeper look at SCHD, but I'm liking it. Congrats to all the holders. And so enough mumbling, I'll end it here. So guys, once again, please help a brother out. Subscribe to the channel. Less than 9% of you are subscribers, so that will really help me boost the channel and make great videos for you. And so I'm using this DRIPCalc Pro stock research software. It offers you a visual way to see and compare different stocks, important metrics, and see which stock is actually performing better. You can do a deep dive into all the reports. You can have your stock-based comp, your revenue, cash flow, net income, shares outstanding. All of these important metrics you can compare and see for individual stocks, as you can see over here, and also compare 2 different stocks side by side. So we offer a lifetime 30% discount for anyone who subscribes today, and the link is in the description below. If you subscribe with this link, with this code, we never will increase your price, so that's for life. And we offer 2 weeks, 14 days free trial. So if you don't like it, you can cancel, but if you do, keep it. Again, it's 30% lifetime discount, so link in the description below, pin comment. Thanks for watching, guys, and I'll see you in the next video. Peace.